Good morning, this is Data Explorers and I'm Jessica Johnson. Some regulatory news first of all. There's been quite a bit of regulatory news in the last 24 hours, including a story that broke in America last night on the SEC being urged to do more to curb the practice of abusive naked short selling. The SEC rules are designed to weed out these abusive practices, such as investors' failure to deliver stock by settlement date. A top advisor to Barack Obama on securities regulation has also said he wants the SEC to require public disclosure of short selling. He's called Raul Campos, and he's a former Democratic SEC commissioner, and he said, "We are looking for disclosure of positions with a small delay after a short sale is made." Harvey Pitt, a former SEC chairman and now CEO of Kalorama Partners, also said that the SEC should close loopholes and enforce current rules against naked short selling. Stock specific now, and carrying on from yesterday where we started our review of stocks that might be affected by the trend of Christmas trading, we're going to look at supermarkets today. In the USA, Best Buy has seen a rise in the percentage of its shares outstanding on loan, as you can see from this graph here, up from 2% in early November to 6% now. So this figure has tripled, and utilisation has also risen to 30%. In the last 3 months, Best Buy's share price has dropped from $45 to $25. Walmart, who own Asda in the UK but are listed on the S&P 500, have 0.9% of its shares outstanding on loan, so much less than Best Buy, down from 1.1% 1 week ago, but a rise from 0.5% in early November. Utilisation is at 6.5%, and there has been a recent increase in the share price from $50 in late October to $58 now, but from 64% in September. And in the UK, Sainsbury's has seen a significant amount of short covering, down from 7% of its shares outstanding on loan in October to 2.5% now. The company had 10% of its shares outstanding on loan in early 2007, which was a 3-year high for them. And Sainsbury's share price has halved in the last year, from 600p in September to 300p now. And finally, Marks & Spencer, who yesterday said they would slash prices for a third day in a row, 20% off selected jewellery and 30% off selected clothing, have 7% of their shares outstanding on loan, up from 5% in mid-October and 6% in the last fortnight. Utilisation is at 25%, and the company's share price has risen from around 200 to 220p in the last month, but is down from 350p in June. Many thanks, have a great day.